Good morning, Doctor. I am Chan Yi Lim, and today our group is going to present our tax assignment. This is our group members who are Bai Hui Min, Chan Yi Lim, Chen Ziheng, Chong Yo Ting, and Sao She Wen. Haley is the client who needs tax advice from us. She is a 35 years old Malaysian and also a tax resident in Malaysia. Haley is a widow with a 5 years old child, and she is currently employed by NextGram Holdings Berhad as a financial manager. Her employment with the company started since 1st of October 2015. Here is the details of employment income for Haley. First of all, Haley has a monthly salary of 7,500 ringgit for her job as a financial manager. As an employee under contract of service, Haley and her employer is compulsory to make a contribution to Employee Provident Fund, which is known as EPF. The employer have to contribute 12% every month, while Haley herself have to contribute 11% per month. Besides EPF, they will also need to contribute to Social Security contributions with its SOSO, where the employer have to contribute 104 ringgit 50 cents every month, and Haley has as an employee have to contribute 29 ringgit 75 cents every month. The next one will be Employment Insurance System (EIS), whereby the employer and employee has to contribute the same percentage of 2%. The year, Haley was provided with health benefits of 3,000 ringgit and also overseas leave passage of 2,500 ringgit for the whole year. During the year, Haley was appointed to work overseas for 30 days in June. Hostel accommodation of 500 ringgit per day is provided to Haley for her overseas working. As Haley was busy for working and unable to look for her child, she left her child with her neighbor and paid her with a childcare fee with 2,000 ringgit every month. Books also provided for her child, and this causes an expense with total of 500 ringgit. During the employment, Haley withdrew 15,000 ringgit from unapproved provident fund, where 9,000 ringgit is contributed by her employer and 6,000 ringgit is contributed by herself. Lastly, Haley has ceased by her employer due to ill health, and she was unable to continue with her job. A compensation for the cessation is given to Haley by her employer with the amount of 30,000 ringgit.
I'm Hui Min, and I will go through Haley's other income and expenditure. For Haley, she received a dividend of 5,000 ringgit from an investment in a US company and an interest income from a fixed deposit made by 31st of August 2024, which provides a 2.75% interest rate per annum. Besides, she also received a rental income of 2,200 ringgit monthly from her own apartment in Selangor with a refundable deposit of 4,400 ringgit and utility deposit of 1,200 ringgit. The expenses from the rental income are repainting, insurance premium on fire, quick rent assessment for year 2024, and maintenance fee for the apartment. A total of 20,000 ringgit was received as royalty income from a marketing reference book written by her. Apart from that, Haley also incurred several expenses, which include 1,500 ringgit on full medical examination for her mother, donate 30,000 ringgit to a healthcare facility for the purchase of kidney dialysis equipment, register for gym membership for 200 ringgit, 140 ringgit monthly on an internet subscription fee registered under Haley's name, and 800 ringgit on dental examination, 5,000 ringgit for management costs, and 42,000 ringgit per year on electric vehicle, and 3,800 ringgit on a new laptop. Lastly, she also paid 300 ringgit for sports training fee.
Good morning, my name is Jong, and now I will explain the calculation of Haley's income tax payable. From this slide, we can see that the calculation is divided into different parts based on the section of the Income Tax Act 2024. Firstly, Haley's 1-year salary is taxable under Section 31A, whereas the EPF, SOSO, and EIS, which are contributed by the company, are non-taxable income. According to Section 31B, the medical benefits 3,000 ringgit and one overseas leave passage of 2,500 ringgit for Haley and her child is exempted. Besides that, the hotel accommodation or 30% of the gross employment income falling between Section 31A, whichever is lower will be exempted under Section 31C, which is 225 ringgit. Additionally, under Section 31D, withdrawal from unapproved provident fund, where 9,000 ringgit was contributed by Haley's employer, is taxable, while 6,000 ringgit contributed by herself is exempted. Next, the compensation of a held 30,000 ringgit will be fully exempted from Section 31E. After that, we can obtain a statutory income of 99,225 ringgit. In addition, the dividend income for foreign source and interest income of fixed deposit from local bank is fully exempted under Section 4C. Under Section 4D, royalty income is taxable with the value of 20,000 ringgit and annual rental income is 26,400 ringgit. The expenses which are deductible are repainting, insurance premium on fire, quad rain, and assessments of for year 2024 and maintenance fee from January to December. After the calculation, net rental income is 19,200 ringgit, and gross rental and royalty income is 39,200 ringgit. Totally up all amount, the aggregate income is 138,425 ringgit, and only can deduct the maximum value of 20,000 ringgit that exempted for the donation to healthcare facility, even though the donation from Heli is 30,000. Therefore, the total income will be 118,425 ringgit.
I will talk about the personal relief. First is personal deduction, which is 9,000 ringgit. Haley has a 5-year-old child which is lower than 18 years old, so the child relief is 2,000 ringgit. Employee is required to contribute 11% of remuneration to EPF, which is 9,900 ringgit, and it is restricted to the maximum of 4,000 ringgit. Total is 29 ringgit and 75 cents per month, and the total is 357 ringgit. And the EIS is 0.2% of Haley's salary, which is 180 ringgit. And the total amount is higher than the restricted amount, which is 350 ringgit. The child care fee is to neighbors, so there is no relief. Haley's spending on for medical examination of mother is 1,500 ringgit, which is restricted to the maximum of 1,000 ringgit. To the lifestyle relief, book for child is 500 ringgit. In-net subscription registered under Haley's name, total is 1,680 ringgit, and the new laptop costs 3,800 ringgit. The total amount of lifestyle relief is restricted to the maximum of 2,500 ringgit. To sport equipment and activity, gym membership fee is 200 ringgit and sport training fee is 300 ringgit. So the total sport equipment and activity relief is 500 ringgit. Dental examination relief is 800 ringgit. Haley purchased an electric vehicle of 42,000 ringgit, which is restricted to the maximum of 2,500 ringgit. Haley's fee for management course is 5,000 ringgit, which is restricted to the maximum of 2,000 ringgit. Then the total relief is 24,650 ringgit. Then we can calculate the chargeable income, which is equal to 93,775 ringgit. The income tax on the first 70,000 ringgit is 3,700 ringgit, and for the next 23,775 at 19% is 4,517 ringgit and 25 cents. The total income tax payable is 8,217 ringgit and 25 cents.
As Haley's tax agent, we are urged to offer her several advice on tax planning to reduce her chargeable income and tax burden based on the findings of the previous computation. First of all, since there are limitations on the amount of each tax relief that is available for tax deduction for a year, Haley should plan ahead of before spending to ensure she has fully used every relief. For instance, Haley's 1,600 ringgit payment for sports training fees qualifies for relief under the sports activities category, but exceeds the maximum deductive limitation of 500 ringgit. To make the most use of these reliefs, Haley can spread some of these expenses over future multiple years. Secondly, for child care fee relief, although Haley spent a significant amount of 24,000 ringgit annually on child care fees, these expenses do not qualify for tax relief under current regulations, as Patty is sent to the neighborhood for babysitting. To address this, Haley should consider child care providers approved by the Malaysian government that enable her to claim child care relief in future years. Additionally, Haley donated 30,000 ringgit to a healthcare facility approved by the relevant authorities. However, there is a limitation on the maximum amount of 20,000 ringgit that can be claimed as a deduction. For Haley to optimize the tax benefits of her donation, it is essential to ensure the donation is fall within the allowable limitation. Last but not least, in the future, Haley can further reduce her taxable income by increasing diversity of expenditures that qualify for tax relief. For example, the government provided a tax relief of up to 3,000 for life insurance premiums. Haley has not utilized this relief in the current year. By purchasing life insurance in the future, Haley can take full advantage of these reliefs to lower her chargeable income. In conclusion, with this advice provided above, we believe that Haley can better manage her tax planning in the future.